So did we call it or did we call it? When Jerome Powell spoke in Washington, D.C., the market reacted in a positive way. The market closed in the green, and one of the things that I said is this seems kind of funny because what it is that he said has nothing to do with being dovish, right? Let me go ahead and share with you to show you exactly what it is that I'm talking about. On the 5-minute time frame, I'm just going to jump right into it, right? Jerome Powell spoke yesterday, and all the market was looking for was to pretty much have a better understanding if he was going to continue to be dovish, which means less aggressive with up and coming interest rate hikes, or is he going to be very hawkish, meaning returning back to possible more aggressive interest rate hikes? I want you to understand the why behind this. The Federal Reserve began to slow down with how aggressive they were being with interest rate hikes because inflation was actually coming down. From 9.1% is what we peaked at, and it came all the way back down to 6.5% as of the last CPI data report reported in the month of January. For those that are unaware, there's going to be a CPI data report reported on February 14th at 2 p.m. Eastern Time, and I will be live streaming it for free on my YouTube channel. So again, make sure that you subscribe. But the reason that this is so important is the comment that he said. He's been more dovish, meaning that the previous interest rate hike, I actually can show you right on over here. The previous interest rate hike was only 0.25%. The one right before that in December was 0.5%. But as you can see, there was 4 consecutive 0.75% interest rate hikes. That's very, very aggressive. And obviously, as inflation was at 9.1%, they had a reason to be this aggressive. Now that they were beginning to slow down, it was expected that that was it for the Federal Reserve, right? They already announced that they're going to focus on their quantitative tightening, which simply means that they're going to be reducing their balance sheet. And all that means is they're going to be hopefully erasing up to $95 billion every single month, up to $95 billion every single month on treasury bonds and mortgage-backed securities. And what that means is, well, let me give you an example of what happens when they don't sell off, right? When they add to their balance sheet. I shared this in one of our previous videos where I showed in 2020 to 2021 when they were printing all of those stimmy checks, right, that everyone was so happy about, the economy went boom, right? Because if they print more money is most likely being circulated. That means economic growth. And that's great, but then guess what happens to the value of the dollar? Well, that's where inflation goes up and the value of the dollar goes down. Your dollar is worth less as you begin to print more. It's not rocket science. Now that they got inflation down to 6.5%, the Federal Reserve was like, okay, hey, things are looking a lot better. There's no reason that I have to continue to raise interest rates 0.75%. They tested out with 0.5%, and then as of January, they tested out with 0.25%. One of the things that Jerome Powell said in his discussion is something that was not expected. They had an expectation for 2023 to be much less aggressive than what they were in 2022. But he said that if job reports, if economic data continues to support that inflation doesn't consistently decline as it has been, and if the economy is showing to be strong enough, that they will have to raise rates more than what was expected. And the really funny thing is, if you guys look back to when that actual meeting actually happened, one of the things that I talked about is all of these headlines were talking about, well, the market ended in the green. Jerome Powell says that inflation is actually still coming down. But the thing that I find so funny is yesterday I highlighted one thing only, is it's not going to surprise me if the headlines begin to shift when the market goes down, because this is what was actually said, right? And I wanted to show you guys this firsthand. So it says stock market news live update, stock market falls as investors access earnings, path for rates. So what she's trying to say is that the Wall Street weighs in for the outlook of interest rate hikes after Federal Reserve Jerome Powell signaled for more rate hikes may be needed than what the market has already priced in, pretty much just factored in. Is that not exactly what we said? And remember, the focus for the Federal Reserve is to bring down inflation. And this is what I talked to my Learn Plan Profit group about. I'm not even showing you guys the technical side of things right now. I'm just explaining the fundamentals of why the market's reacting the way that it is. I wanted to give you guys this example because, take someone that weighs 300 pounds If they go from 300 pounds and they begin to work out and exercise, they can more quickly, let's say in about 2 to 3 months, let's say 6 months, they go from 300 pounds all the way down to 250. Okay, great. How long do you think it's going to take them to go from 250 to 200? Well, it's always, as you get closer to your goal, as you get closer to, a smaller number, it gets much more difficult to get to that smaller number. You might have lost 50 pounds in 6 months, but it might take you a year to a year and a half to lose that additional 50 pounds, right? It's not just because you lost the first 50 in 6 months, does that mean that you're going to lose the next 50 in 6 months? And the reason I'm sharing this with you is, well, what does that have to do with inflation? Well, in the past couple of months, right, as inflation went from 9.1% down to 6.5%, what have we experienced? A consistent decline every single CPI data report. It's been so beautiful, right? But what do you think is going to begin to happen as we begin to, actually come down closer to the 6s and to the 5s, right? Do you think every single month it's going to continue to go down month over month? No, right? I mean, look at oil prices. I mean, they've come down quite a bit, right? And the cost of food, yes, it's a little bit more expensive, and we might still see consistent declines. But now this is where we begin to kind of consolidate, and this is where you can begin to run into trouble because. What did Jerome Powell say? He's just setting himself up for the alley-oop because I'm pretty confident that they're going to have to raise rates more than what was expected or more than currently is being factored in. Why? Well, because it's not going to come down every single month from 6.5 to 6.2 to then 5.9 to then 5.5. There's going to be months where we might come in at, from 6.5 maybe to 6.7 and then to 6.3 and then maybe to 6.4 and then maybe to 5.9. This is where it's going to get rocky. And the reason I'm making this video is look into it. Let's say I'm completely wrong, right? Don't overcomplicate it. Just think about what's going on. We went from 9.1% down to 6.5. Do you really think it's going to continue to decline month over month when the Federal Reserve begins to reduce their balance sheet from by $95 billion every single month? Do you really think that that the overall economy is going to feel super confident when over $30 billion of mortgage-backed securities are being wiped off of the balance sheet? No, mortgage rates are going to continue to skyrocket, or they're going to begin to go back up. Real estate's going to begin to slow down. It's going to begin to get more expensive, right? And then this is where we begin that consolidation. All I'm saying is now is where I would say the people that are well-positioned, right, that are not fully invested, but understand what is going on are going to do really well. You're going to see people in the comment section of like, no, market's going to recover, right? No, Federal Reserve, things are going to begin to go back up. Okay, let's follow up, right? All I'm saying is I think that Jerome Powell, who's the head of the Federal Reserve, because of that statement of they will raise rates if needed, if economic data supports that inflation is not declining, right, month over month. I think he's just setting himself up for an alley-oop where, hey, maybe not this CPI data report on February 14th, but maybe the one in March, right? Maybe it comes in a little bit hotter than expected. And then the, Federal Reserve begins to factor in, hey, we're going to have to be, go back to the 0.5% interest rate hike or be more aggressive, right? It's not coming down as quickly as expected. Tomorrow we have initial claims and continuing claims report, right? We'll see how the unemployment rate continues to decline or rise. If they see a strong labor market, if they see a strong economy, right? If I see a strong guy and he's my friend, right? And I'm messing around with him, and I just love giving analogies, right? If I can see that he's strong, I can push him or something like that, or be aggressive, right? And I know he can take it, right? That's what Jerome Powell is pretty much seeing from our economy, where he's seeing a strong economy right now, especially because of our job market. And although that's a good thing, it just means that they can be more aggressive with interest rate hikes, and the economy can most likely take it. And that's what I want you to understand. It's the domino effect of why bad news is good news and good news is bad news right now. But only time will tell, right? So I really do appreciate you guys' time. And again, I wanted to be able to show you that on my SQQQ position, I didn't trade beyond what it is that I showed you guys last time, 15,500. And I'm very happy with how today played out. If you have any other questions about what we talked about today, you guys know exactly where to reach out to me. That's going to be via Discord or via Instagram. And that's the first or third link in the description down below. I trade with one group and one group only, and that is my Learn Plan Profit group. If you want the ability ability to watch me trade live every single day. It's the only group that I work with on a closer basis. You don't have to, but if you want my time, if you want access to me and be able to watch me trade live every day, then this is the only thing that I offer. I offer nothing else. You're going to see a bunch of fake accounts that are going to try to reach out to you pretending to be me to manage your money. I do none of that. I offer one thing, and it's literally the second link in the description down below. If you want to watch me trade live every day, if you want to work with me on a closer basis, if you want access to the A to Z video lesson library, this is a one-time payment, lifetime access. And yes, by clicking the second link, you get the biggest discount and you can watch me trade live as soon as tomorrow at market open. I really do appreciate you guys' time. And like always, let's make sure that we end the year on a green note. Take it easy, team.